What's up everyone, it's Matty from Logikfx, and in this video I'll be covering a swing trading strategy we use here at Logikfx. If you've been an avid watcher, an avid trader, an avid reader of our analysis and trade ideas, you'll probably already get a gist of what I'm about to cover, but I'm going to go into it with a bit more detail with a GBP Swiss franc example that I posted last night. So let's get straight into the video on how we're conducting these swing trades. And when I mean swing trades here at Logikfx, it can last anywhere between a few weeks to a few months. So if that's the time horizons you're looking at, and it should be, then this is definitely a video for you to watch. So, GBP Swiss franc. What went on in the analysis? Well, let's go over the swing trading strategy in a top level fundamental overview, because this is what we're actually doing here at Logikfx. We're giving you that fundamental data, the top level view of what's going on between different countries on an economic scale. And from doing this, we can then get a gist, an idea of what the future currency value should be. So we have majority of these indicators already outlined here in this video. So the first one is the macro currency strength meter. What this does is it actually identifies on a domestic level how strong or weak a currency should be. The next step, GDP differentials. We also have an indicator for this, really easy to use because we cannot be bothered strolling through the internet, downloading data and then using Excel, because we want to reduce as much time as possible doing that because it's so much grunt work that we don't want to be doing. Third part is the international trade analysis. Also, we call this the import-export analysis because we want to know what's going on between countries. What are they selling? What are they buying between other countries? And how this can affect the currency exchange rate. For example, if Microsoft's going to buy like 1 million chips from the US, they're going to sell 1 million chips from the US and Britain's going to buy it, then that's definitely going to affect the currency exchange rate value, right? Next one, the next macro indicator is the interest rate differentials. Another really important one, although a lot of the monetary authorities around the world are actually starting to reduce their interest rates, mainly because of this current pandemic and other recessionary issues. Finally, we have the domestic stock market performance. And what we do here is basically analyze how wealthy or how rich is a country becoming, or is it becoming poorer? And in doing so, we can gauge whether investors are looking to protect their assets from inflation or deflation, and in doing so, this will affect the currency exchange rate that those assets are actually priced in. Now, when we've gone over that value analysis, so once we've covered those economic indicators, we then look towards actually timing those and optimizing those. So we get our fundamental bias, we get our overall trade bias, which direction we want to go through, using the top level overview, using the fundamentals, and then after that, what we want to be doing is actually optimizing this position. So by optimizing, I mean we need to be asking the right questions to ourselves. Are we trading against the market, or are we trading with the market? And how we do this is by looking at the market sentiment. So when I mean the market sentiment for Forex, I mean these COT reports. Really important to identify how to use these if you're wanting to be a Forex trader. And then technicals as the last bit. And I'm sure everyone watching this video has probably seen so many videos about technicals at Logikfx. Me personally, I don't really care too much about the technicals. I hardly look at the price chart itself, but it can still be useful at timing the position at the end. But until you actually know what bias you want, you don't really need to be looking at technicals. That's honestly my point of view. So, again, I'll just cover it in a quick rundown. Economic indicators is our first step. Then we optimize that by seeing whether we're trading with the market or against it. If we're trading against it, then we tell ourselves, okay, maybe it's not the right time to trade. If we're trading with the market and everything is green, we could say maybe it is the right time to trade the markets. So in the GBP Swiss franc example, I'm using a traffic light system here. So if you're not familiar with this, green means it's ready, red means it's not ready, then we might have an amber or a grey, which means it's neutral. So what's ready on our analysis? Well, the macro currency strength meter is ready, so let's go have a look at that. What is it saying? Well, the macro currency strength meter, I've already said, it analyzes the domestic economy of each country that I pick. For example, Great Britain, the UK, uses the pounds, the British pounds, and Switzerland uses the Swiss franc. So I have the UK GBP in the blue line and have the Swiss franc in the purple line. So what's going on a fundamental basis is that since the 21st of November, the pound has been in a negative macro score. This means it's had lots of negative fundamental data suggesting that the pound should be weakening. On the flip side, the Swiss franc is actually starting to strengthen. And when has that started? Well, if we look at the 21st of November, all the way until now, the purple line has been increasing, right? This is creating a really important and a really interesting opportunity to potentially be shorting the pound against the Swiss franc. This is because one side is weakening and the other side is strengthening on a domestic level. And that is why we're green on our fundamental economic indicator here on the top level overview. Now, the GDP differentials is one of our lagging indicators. It's telling us how much is a country growing basically on an economic scale overall. It's lagging because it uses lots of different reports to make up that final GDP number, and those reports are actually released before the final GDP data is released. So you can actually, as a Forex trader, what you want to be doing is basically what the currency strength meter is doing, is telling us beforehand if a country is strengthening or weakening. Now, the IMF also released some forecasts which are really useful. So we'll go ahead and use the GDP differential indicator right now. And we want the pound against the Swiss franc. If I can find it, that is. So the Swiss franc, let's go down the list. Where are you? Down there. What we have is a positive GDP growth differential. And what this is doing is actually bullish for the pound, because we can see that overall in 2021, the IMF is actually forecasting the UK to grow much faster than Switzerland. And it's actually creating this bullish bias in our overall system and analysis. And you can see here there's a 6.8% change in the differential for the UK since last year. Now, what is the next part of the analysis? Well, we said that's red because from our macro currency strength meter analysis, so from our first step, we want to be shorting GBP Swiss franc. Now, the GDP differentials were like, nah, maybe it's not a good idea. So that's why we've put it as a red there in the traffic light system. Now, the international trade analysis is an important part, and we'll actually be releasing a piece of tech which is going to be so useful for you guys. It might be coming out for free. Not too sure yet. That's still under the works, but it's going to be really interesting because what it's going to be doing here is actually identifying each country's top exports, and in doing so, you can focus on different industries during this analysis. So for the GBP Swiss franc analysis, there was a few factors that we considered, and we did this because of the majority of the exports that were identified. So the UK exports a lot of gold. As you can see, 68.7% of exports are gold to Switzerland. So it makes absolute perfect sense to consider gold in our Forex analysis for GBP Swiss franc. Now, there are actually 4 other things that the UK exports, and it's the top exports, which could also impact the currency value. So we've also included that, which is crude petroleum and also the gas turbine / cars industry. Now, the crude petroleum, we've also used Brent, so the oil prices, and then we've also used Rolls-Royce, which is one of the UK's biggest manufacturers in the aerospace industry. So those are the 3 main ones. So we have Brent, we have gold, and then we have Rolls-Royce. So what I like to do personally is choose 3 different commodities and industries and / companies to analyze during the import-export analysis. And over the past 11 years now, we can see that the Brent oil against GBP Swiss franc has around a 53% correlation, a positive one. And that means 53%, so over half of the time that Brent oil prices go up, GBP Swiss franc follows. When Brent oil prices go down, over 50% of the time, GBP Swiss franc price follows. This is why it's really important to include the different types of export analysis within your overall system. So after we identified that, we saw that because of the most recent data, Brent oil prices have been climbing since March. And in the last month, there was actually a slight growth in Brent oil prices, which meant currently the oil prices aren't too great for our idea. So we move on to gold. So it's out of 3. So 1 out of 3 of our export analysis indicators are saying that we should be longing, because oil prices were going up. That correlates to GB Swiss franc going up as well, and that's not too great for our idea. On the flip side, gold is saying that potentially we could be seeing a downside move. And why is that? Let's just change that to GB Swiss franc. Accidentally put GBPAD there. Why is that? Well, the main reason that is because gold has a minus 33% correlation with GBP Swiss franc. That means on the 33% basis, as gold prices go up, it has a 33% potential chance that also GBP Swiss franc's price will go down, because it's opposite, it's inverted, it's a negative correlation. And that's why currently gold is agreeing with our idea. Gold is saying that, right, our prices are going up, and it's telling GBP Swiss franc that your prices might be going down soon. Cool. So we've analyzed 2 out of 3 export analysis factors, and one of them is saying long, one of them is saying short. Now what does Rolls-Royce say? Our final decider. Rolls-Royce, again, very strong positive correlation against GBP Swiss franc. And what is it doing? Well, unfortunately for us, and unfortunately for our analysis on our fundamental bias from the currency strength meter, it is saying that you are potentially going to grow to GBP Swiss franc. Why is that? Because Rolls-Royce prices have increased quite significantly over the past month or 2. And that correlates on that 54% positive correlation basis that we might be also seeing a GBP Swiss franc upside move in the future. And that is why our international trade analysis is red here. So what I'm trying to do here is explain that swing trading strategy, explain the analysis step by step for you here so you're understanding it when you're reading this analysis, because anyone here watching this video can read this analysis for free right now. I'm releasing this, trying to release this on a weekly basis. Do bear with me if I'm not releasing it frequently, because I only like to post ideas which I think are potentially ready for the market or upcoming to be ready. Now, one of the final steps, one of them, is the interest rate differentials. And on the interest rate differentials, we can kind of see that it's a more smooth-ish line in comparison to GBP Swiss franc. So what I mean by that is, as the interest rates kind of stagnate and go down, GBP Swiss franc stagnates and goes down too. As the interest rate differentials stagnate and go up, GBP Swiss franc stagnates and it goes up and up. Here we have a divergence where it's going down, but overall we can kind of see that it has a similar shape to the currency exchange rate, right? Because interest rates are a really strong macro indicator for money, and by money I mean currency. And this is going to heavily affect how investors are going to place their money around the world, and what assets they're going to be investing in, and how they're going to invest in those assets. They need to exchange their currency. So the currency interest rate differentials, they were saying that potentially what we're looking at is a downside move, because in March we saw the interest rate differential drop significantly, over 0.6%. That's a really big change in interest rate differentials. Then we saw the currency exchange rate actually follow suit. Now since then, it's kind of been stagnating, right? We have that stagnation period. What we're really seeing here is a potential downside move coming in the future. And why I mean that is because the UK has actually mentioned that they may be going into negative interest rates. And if they do so, the value of their currency is going to be going down. So that's why we currently have a green for the interest rate differentials. The final part is the domestic stock market analysis. And if I just move this bigger for you guys, you can see that what we've done is get the FTSE 100, which is the 100 top companies in the UK, and priced it in Swiss francs. Now, after this, what we've seen is that the FTSE in Swiss francs hasn't really recovered since the pandemic down in March. We can see the highs here during March when it was going really well. The pandemic hit, COVID-19, all the bad news, boom, dropped down, and it hasn't really recovered, right? It's slightly recovering, but it's still over a 20% value drop since its previous highs. And this is showing that investors are still not looking very bullish. So overall, this is actually looking like a bearish move still coming. There may be more bad news coming in for COVID-19 or COVID 2021 at this rate, and this may further impact the currency value. And that's why we're actually green here in the domestic stock market performance, because it's agreeing and it's potentially saying in the future that there may be more bad news. There may be more further stock performance decreases. So after that, we have our fundamental bias. We have our economic indicators saying that they're green for a potential downside movement overall, 3 out of 5. Obviously, the more indicators you have green here, the higher confidence you should have in the idea itself, but it's still a majority. There's still that percentage chance that this is a good idea, so we're putting it out there for you guys to read for free. The next part is optimization. Now that we know to short GBP Swiss franc, what do we want to be doing to optimize this? Well, we want to be looking at the COT reports. Now, they're currently green in the analysis, and they're green because of the recent data that was released. But the most recent data is still back in the 21st of December. And this is because the CFTC are on a nice holiday and they're coming back to update the COT reports back to tomorrow, I believe, 4th of January next week. So we'll get a good idea next week of the updated positioning of the hedge funds. And what we're going to do here on the COT indicator is basically identify what are the hedge funds doing. Well, over the past year, hedge funds for the pound, so the purple line for hedge funds, for the pound, they've been longing it in January 2020. Then they started shorting it during April, longing it in around August, September area. And then they started shorting it again during November. Now, right now, we're at about a neutral level where positions haven't really changed. So it would be a really good decider point when those COT reports are released. But for the Swiss franc, on the other hand, we can see that they're longing the Swiss franc over the whole year and even since the most recent date in 2021. Now, how do I know this? Because the open interest, basically the pink line here, the net open interest is saying that overall, because it's positive, the hedge funds are longing the Swiss franc. If it was negative, if the pink line was down here, then it would be saying that they're selling the Swiss franc. But because it's been positive for so long, they're still longing the Swiss franc because they're bullish on it, and they're bullish in the future that it will appreciate. That's why we have the greens on the sentiment side, because now we know that we're not trading against the market. We have the power of the big money on our side. When the sentiment is against you, there is that possibility that, well, quite a high possibility that you'll be trading against the markets and you'll be trading against the big boy money as well. The final part, what everyone likes to read, price charts. Not so much on my side, but what we can really see here is that over the past 2-3 years now, GBP Swiss franc has been sold a lot. It's depreciated in value so much in comparison to other currencies. And if you've been trying to long GBP Swiss franc, you won't be getting many good positions. Now, what can we see here in the most recent data? Well, in the most recent data now in 2020, the GBP Swiss franc fell during the pandemic. It kind of recovered and it's stagnating. And we have 3 key areas here. Those 3 key areas are potential tops that may hold on a resistance level, right? if we just draw a line of best fit there. So around this level between 1.2 and 1.22, we've seen sellers come in and reject the pound going back down. As it came up, it got rejected and it's coming back down. Now it's got back to this level again. Will it be rejected again? Potentially so, right? The odds are potentially in our favor here for those sellers to be coming back. It's at a price they want to sell, and it may follow suit. And we may even see this position trend down for the next few months. So that's basically the swing trading strategy in a nutshell on how we do analysis here at Logikfx, how we use the technology here at Logikfx, the strength meter, the differentials, all that stuff, and how you could be using it too. Thanks for watching this swing trading strategy video. If you liked it, please do like the video, comment down anything below, hit that subscribe button as well, because over 80% of you are not subscribed to the channel, so make sure to hit that subscribe and keep up to it. If you want to read our free analysis, head over to our website in the link below to read lots of free analysis and how you can get in on these ideas too. It's Matty from Logikfx, and I'll see you in the next one.